All right, welcome everybody, and I'm really excited to see so many people in attendance tonight. We've got a big attendance, so that's excellent to see. Plenty of interest, a very important topic we're covering here tonight. 3 core strategies every retiree must use. 7 o'clock sharp my time, so let's get into it. I'd like to officially welcome you to today's webcast. You know, the 3 core strategies every retiree must use. I really feel that this webinar is of utmost importance for you, whether you're currently retired, soon to be retired, or in the planning stages of retirement. All right. My promise to you today is as follows. In this webinar, you'll see how you can retire with a peace of mind. All right, knowing that you can steadily grow your portfolio, generate income, and preserve your capital. Now, just a word of warning up front, this is not a get-rich-quick scheme. All right. This is for serious people who take their investing seriously, take their retirement investing seriously. You know, the strategies that we spent many, many hours putting together here, these are not penny stock sort of specials, something that goes from 2 cents to 30 cents, and all of a sudden you become wealthy overnight, right? These are prudent strategies, often using, 95% of the time using blue chip stocks, all right? This is what it's all about, right? This is such an important topic. And unfortunately, many people are just not ready for retirement. Often retirees or those leading up to retirement are let down by others who don't care about your money as much as you do. Right, so if you Google retirement planning, right, you'll get over 4.1 million results currently, around about there, if you Google it up on Google Australia. Right, every time you turn around, there's a TV commercial talking about retirement. There's lots of info out there. It can become pretty overwhelming. My goal today is to cut through all the noise and to show you 3 main things you should be doing. All right, to begin things, to get things going and to get you interacting there in the Q&A box, I'm going to ask you this question here. What is the hardest part about preparing for retirement or being retired? Right, so just in a sentence or two, just type your answers there into the chat box. Let me know what some of the hardest things about, preparing for retirement or being retired. What are the hardest things for you? All right, let's see. Yeah, coming through here, having to plan and be disciplined about it. Let's see, yeah, quite a few. Sorry if I can't keep up. Well, tons coming through. David notes income, Mike planning, keep independent. Hannah notes not losing your money. Edward notes knowing how to generate an income. Aha, I like that one. Yep, and I see there's plenty more coming through. Look, I'm not going to be able to read them all out. Maybe at the end of Q&A I could share a few more, but thank you for that. It's great to see so much interest and feedback coming through. Excellent. All right, let's get going. So I want you to have a retirement that gives you peace of mind. And I'm going to put some structure around this diagram shortly. What I mean by that is at retirement or leading up to retirement, you want the following, right? You want money, right, to do the things that you want to do, goes without saying, right? You need time, right, to do the things that you want to do. You need confidence, right? So there it is. Money, time, and confidence. Might be a bit small on your screen, but there it is. Money, time, and confidence. Those are the things that you're after, right? To do that, there are 3 parts of your investing that we need to focus on. Number 1 here is profit, right? The way we profit, or in other words, the way that we grow our capital, right? That's where we primarily focus on strategies to make money when the market is going up or going down. Think of this as the building of the overall nest egg. Next step there is to provide, right? So we need to focus on providing income. Since we're already building the next nest egg, we need a way to get some spending cash, right? We don't want to always dip into the main account to pay the bills or take a vacation. We want another source for that. The last piece here is that we want to preserve what we've got. Right? We want to make sure that any loss that we take is minimized and everything that we do has minimal risk, and we know how to protect ourselves. It's very important, that step. Right, now to do this, there are several techniques our successful retirees use in their account. And I want to lay out the map here and then today, and I'll give you the shortcut to get there quickly. When it comes to the profit side of things, the first thing that we need to do is to focus on, right, so over here you'll see we're focusing on stocks and ETFs, right? So we're going to focus on the up markets primarily, but also we'll do a bit of work in the falling markets. Then we're also going to look at dividends. So over here, it's just popped up, dividends, right? Really important. The high yielding dividend stocks. And there are ETFs that pay some good dividends too. And then we're also going to look at franking credits, right? Franking credits are very important, and I guess the next elections will shape up the future of franking credits. But right now, and possibly into the future, it's still going to play a big part in retirement portfolios, right? There are additional techniques, that we can go a lot more into, all right? But I just want to be careful about this, about going too in depth, right? I just want you to see there's tons of stuff you can do. But this course is going to concentrate on just 3 powerful techniques which work very well in Australia. Right, so we're going to look at stocks and ETFs for capital appreciation, dividends, franking credits. I'm also going to teach you how to do covered calls. Now, I'm going to give you a bit of a taste today about this. And just to put everything up front here, by the end of the webinar today, within the next 50 to 60 odd minutes, at the end, I'm going to offer you, if you're interested, we then have put together a very specialized course with 5 webcasts, specialized webcasts, along with 4 recordings to teach you all this in a lot of detail. I'm not going to be able to get into a huge amount of detail within an hour, but this is free, this webcast that we're doing today. So, if you don't join us at the more detailed course, you will pick up a lot in this short time period here. All right. And the last thing there is we're going to touch lightly on some very basic options knowledge to empower you. So we also teach you some basic hedging strategies to protect your capital. Now, if we look at this, there are several projects our successful retirees use in their retirement. And I promised you at this webinar, I'd give you 3 core strategies to help get results faster. But if we had to shortcut this, there are 3 that we'd focus on first that you should be using. Right, number 1, we need to have a profit plan using stocks to grow our portfolio, stocks and ETFs. So this one here, think of that as number 1. Secondly, we need to provide steady income. How do we generate that steady income? And we'll focus on dividends and franking credits. So here they are, dividends and franking credits in addition to covered calls. And I'm going to get into a bit more detail as to what covered calls mean shortly. If you're not using covered calls, if you're in retirement or approaching retirement, you're missing out. All right. And lastly, we need to preserve capital. And this is where this comes into play. All right. There we'll focus on a trade everyone can do to protect against big losses. Right. So we'll look at a protective put. Right. It'll be in more detail in the detailed course. But for this webinar, we'll just touch lightly at this stage on covered calls. We're not going to get into hedging in this webcast. All right, so if you're happy with that, let me know in the Q&A box. Let's just double check that Q&A box one last time. Let me know if you're good to go. Just type in somewhere like, okay, good to go. Yep, excellent. All right, so, yep, Lee notes, good, sure thing, great. Yep, excellent. All right, well, thank you for that. Let's get into it. Right, so the first thing we'll focus on is using stocks and ETFs to profit in the market. And primarily today, we're going to focus on stocks. Today, we're going to focus on making money when the market is going up and doing it in a way that we can profit nicely in up markets. And if the market turns against us, we minimize our risks. All right, now to do that, we need to have the mantra of invest in safety first. All right, this is all about safety, right? I'm not after the get rich quick type schemes, right? In other words, for a retirement account, we want to look primarily at a stock safety, more so than anything else, right? Well, it's fun to hit, the ball out of the park, 6 runs in cricket if you wish, right? Most home run hitters or those that play cricket hit 6s out of the park, all right? Often it doesn't happen, right? So in baseball, it's often what they call a strikeout. In cricket, you call it a slogger and you often get bowled trying to go for the big hit, right? The problem with that type of approach is you can end up trading in a way that is totally different than who you really are and who you want to be, right? So this course is not about taking silly risks, all right? And if you're not seeing the returns you want, often the answer is not to go faster. Don't try to become a day trader or a really short-term trader to make your money back quickly. right? When teaching children to drive, so I'm assuming there's many retirees in attendance today, or those leading up to retirement, right? I'm sure at some point in your life, you've probably taught somebody to drive, right? Right? And they were struggling, right? And when they were struggling, you didn't tell them, hey, hit the accelerator harder, right? You said, no, go slower, right? So you would have told them to slow down. So we're going to do the same thing. It all starts with this quote from our founder, Dr. Bartolito at VectorVest. In your notes, good portfolio management starts with buying the right stocks. And good players are important. Good stocks are important. Then it comes down to good management with the good stocks. I put the analogy here. I'm a bit of a rugby fan. Australia rugby side of 1905, right? You've got to have the good coaches, but you've also got to have the good players. In stock analogy terms, we've got to be the good stock managers, but we've got to also pick the right stocks. So let's do a stock picking exercise. I'm going to call this which looks better, all right? Just like at the eye doctor, right? You know, they tell you which image looks better. Is this clearer or that one? The reason we're doing this is to get practice in picking stocks for our portfolio, to learn how to identify stocks faster. All right, so here we go. First one, I had to put it in there, Telstra, right? Falling share price, there's the earnings, right? That's a 12-month leading forecast and earnings proprietary to VectorVest. Look at that correlation, falling earnings, falling share price, right? Would you prefer that or that? Look at the earnings on Aristocrat, all right? Look at the share price, all right? Get the idea, right? First one again, NAB. Like to look at that profile in the earnings, or do you prefer Lifestyle Communications? Suncorp Group, or Macquarie Group, right? It's B every time, right? What about this one here, Woolworths? Like the earnings profile on that and the way the stock's been going. In all fairness, the earnings profile has been turning around and we're starting to see that share price lift up. All right, but it's been a fairly bumpy ride, has it not? Do you have Woolworths, or would you rather go for someone like Ria Group? Sure, the earnings were a little bit bumpy here, but on average, you can't complain with that set of earnings. Look at the share price. What about QBE? Look at the earnings there. Really starting to fall away quite sharply now. All right, would you have QBE or BlueScope Steel? Here's another one. GrainCorp. Earnings are making a bit of a comeback, but they looks like they're dropping off again. Or Reece Limited. All right, and the last set here, Flight Centre. In recent times, Flight Centre has really been taking off, pardon the pun. You can see the earnings really starting to crank up, but look at it historically over the last couple of years. All right, Flight Centre, or would you rather have held Cochlear? Look at those earnings, infinitely better, right? All right, so what did these stocks have in common? All right, and at this webcast, I promised I would give you a checklist. Here's the checklist. All right, we want to look for stocks with earnings consistency. We saw those earnings, beautiful earnings on those B stocks, right? The ones A versus B. All right, company size, price behavior, business longevity, dividend history, debt to equity ratios. All right, all the stocks labeled B passed our stock safety checklist. Right, the other stocks did not necessarily pass. Right, so trying to do all that on your own can be tough and time consuming. In VectorVest, we do that for you in a matter of seconds. If you try and look up all that stuff on your own, you just get buried by data. So what we've done here at VectorVest is we've created one single indicator that looks at it all for you. That indicator then, for those of you that are existing subscribers, you'll probably know this all too well, relative safety, and thank goodness for relative safety. Right? Relative safety looks at the consistency and reliability of financials. We want stocks with strong track records of having consistent cash flows, reliable management, growing their business, etc., etc. Relative safety is on a scale of 0 to 2 in the VectorVest system. So we're really looking for stocks well above 1. This is where we want to be finding the stocks. A lot of those stocks that I showed you earlier, the A versus the B, the A stocks, a lot of them fell in these sort of categories and these categories on their relative safety. All right, so park that to one side for now. Just remember, we want stocks with good, consistent cash flows and financials, which is derived by the relative safety indicator. All right, now let's look at this one over here. Here's an example of one of our favorite searches that we use, relative value, right? It's looking at long-term price appreciation potential. This one here. I'm not going to get into all the definitions tonight on this, but just want to show you very briefly here. It's looking for companies with good upside potential. There's our relative safety indicator, looking for the strong set of financials, right? We set the 50-day moving average to be at least 100,000 trades a day on average over the last 50 days. Not a penny stock, right? So we're not looking at penny stocks. And here we're not going to be looking for market indices or contra ETFs. Don't worry if you don't know what contra ETFs are. It's just fair to say that we're looking for stocks to buy in a rising market. Look at the type of stocks that it picks up. Look at the top three here, BHP, Rio, and CSL. Now, a few of you might be saying, oh, hang on, I've held BHP for many years. I wouldn't touch BHP. It burnt me, and so did Rio, and I'm not going to buy it again. Well, hang on. I'm not talking about historically. I'm talking about what's in front of us right now. Here's a look at BHP. Right, if you look at this since about October, November of 2016, the earnings started to turn around. This company was telling you that something is changing, right? The sell-off is over, the earnings decline is over, things are turning around. And where did the share price go? The share price was around about $23, $24 at that stage. Look at it now, well over 30. Same with Rio, same deal. The earnings start turning around about here, $50. Look at it now, over $80. Same with CSL in terms of the smooth left to right profiles that we're looking for, but this one going back quite a bit, it hasn't really had a rough set of earnings, right? It's had a very smooth set of earnings for quite some time. Look at that beautiful equity curve. These are the type of stocks that we're looking to put into our retirement portfolios, right? So this is how we do it. Here's the All Ords dividend payers portfolio that VectorVest spent many hours perfecting. Strong financial track record is likely to ensure a strong dividend continuation. And this one here, just for academic purposes, please, we're not promoting managed funds. We give you the tools so you can build and dissect and get confidence with the type of portfolios we've got on offer here. But just out of interest, this one's up over 163% since 2013, annualizing over 30% a year. Even if you achieved a third of that, would you be happy? I would, right? Because that would mean I would make on average 10% annualized, and that does not take into account the dividends or franking credits, all right, or any other premiums that we might earn through, let's say, covered calls. So what I'm saying here is that this is exclusive of dividends and franking credits. When you don't focus on safety, it leads to a portfolio roller coaster ride, right? Instead, when you focus on safety, you get that nice steady climb, right? And this is about profiting and growing that nest egg over time. Right, so as I noted, this is not a get-rich-quick gamble type scheme. We want to do things carefully and calculated. The second thing we'll focus on is using dividends, franking credits, and we're also going to look at covered calls to provide some income. All right, so this way we're going to generate some disposable income to help you do those little things that you want to do. All right, and to do that, you want to get paid. It's important. In retirement, one of the most important factors is getting that yield. We need the yield to be coming in on our capital, right? And one of the benefits in focusing on these really safe stocks is that they typically pay a nice dividend to shareholders, right? You want to capitalize on that, right? Look, I know, yeah, everybody knows about dividends, right? But finding the best dividend paying companies for a lot of people isn't the easiest thing to do. For example, dare I say it, a lot of people have held on to Telstra for the dividends and franking credits. Now, not only has the share price fallen, but so too has the dividends, right? So you have to be selective and clever about the dividend stocks that you're holding on to. Here's the All Ords dividend payers portfolio, another one of the retirement portfolios we put together in the VectorVest system, and it started out with $250,000 invested. Not only has it achieved over 32% annualized since 2013, but this is what we're really interested in as well, right? The dividends and the franking credits, right? So it worked out around about $17,300 per year since 2013 on the 250K investment. That's about 6.9% on the initial $250,000 a year invested. That doesn't even take into account the capital growth. So here are our retirement screening criteria, some of the things that we look at, right? So we're looking for dividends in this example here. So I'm under searches, retirement. Here's one of our searches, dividend delete, all right? So we're going to find stocks with a dividend yield of 3% or better, good fundamentals and technicals behind these stocks. This YSG indicator, dividend yield, dividend safety, dividend growth on a scale of 0 to 2. So we want the good dividend yield, safety and growth taking place. I'm just bringing that up as an example. This is the building blocks from which we build those types of portfolios. Right, so here's another search. This one here falls under the franking credits, right? So searches franking credits. And it's looking for both interim and final franking credits to be fully franked. In this particular example here, we're making sure that the dividend is 2%, but we also get the full franking credits thrown in on top. So it all adds up. Now, we all own some blue chips, right? Most likely, right? What about earning money to own your shares? Yes, I'm not talking about dividends or franking credits. So I'm not talking about dividends or franking credits. I'm talking about another type of payment. Yes, and there is one out there. It's a premium payment. It's been a very popular strategy with the retirees over many years. This strategy, believe it or not, is safer than buying a share long. I'll repeat that. This strategy is safer than buying a share long. This strategy is called a covered call. Right? You may have heard of it. If you haven't, look into it. It's well worth looking into it. Capital appreciation may be your only consideration, right? But earning a premium is worthwhile along the journey. And here you can earn a premium by holding a stock, right? So let's look at the XY axis here. We're after getting some capital growth on our share, right? What if I was to do this? I'll put this little line in here. What does that mean? I'll explain this shortly. So let's take a real life example. Don't worry which stock this is. It's more just the example. This was a stock in the US that I was looking at a while back, Thor Industries, but I'm going to demonstrate the covered call principle here. So what you can do is you can buy a given stock. So let's just pretend, for argument's sake, this is BHP or Rio, whoever it might be. We'll get into more examples on those very shortly, at least using BHP. Let's say we bought the stock for around about $106 a share. Let's say we bought it right there. All right, and we thought, wow, surely the stock at some point is probably going to have to consolidate. It can't keep running up indefinitely, but we like the long-term prospects of that stock. What we could do here is we could go to the market and say, well, look, it's probably unlikely that in the next 2 or 3 months that the stocks are going to go all the way to $120 a share. So therefore, why don't I give somebody the rights to own the stock if it goes to $120 a share, and they're going to have to pay me some money for those rights, right? And the person comes back who you're offering that to, there's a market out there, someone will come back and say, okay, I'll pay you $2.10 per share if I can have the right to own the shares at $120 a share. Now, first thing you might be thinking, if you're brand new to the whole concept of covered calls, you might be thinking to yourself, why doesn't the person just simply go to the market and buy them for $106 a share? Because the person on the other side of that contract is possibly thinking along the lines to say there's a good chance it's going to break well above 120. It might go to $200 a share, and I've got this little contract here that allows me to buy it off another person at $120 a share. Now, in order to get that right, they're going to have to pay some money, $2.10 per share. They pay that. Once you are paid that amount, the $2.10 per share, it's yours forever. They can't take it back. You get to keep it. All right, so that's just a general concept there on covered calls. In the more detailed course, we get a lot more into it. I just want you to become aware of it because as a retiree, you can get dividends, franking credits, capital appreciation, and option premiums. And no, I'm not talking about the scary options. I'm talking about super low risk options, options that are less risky than buying a share long. So we'll show you at least 2 of those strategies in the more detailed course for those of you that are interested. All right, so let's look at this. A lot of investors focus solely on capital appreciation, which definitely should be one source of growing your money, right? In addition, you've got other investors out there that also focus heavily on dividends and franking credits, right? you're now starting to generate some additional income. Now, if you throw in, some covered calls in there, in other words, we're going to get some options premium built into there as well, you can start to see some real power starting to take place. So as a retiree, or those leading up to retirement, to build up your nest egg, capital appreciation, dividends, franking credits, and option premium. These are all ways that you can grow your nest egg. It all adds up. Let me give you a real life example here. Here's BHP. I picked on this example back in 2017. As it's turning out, the 2018 I think is going to be even better for this exact same example. All right, so first thing first, let me show you something here. I want to just point down to the bottom right of the screen here. Relative safety is at 1.21. Remember right at the start, we spoke about relative safety. Remember I noted that anything above 1.2 is very good, and if you can get 1.4, it's absolutely top notch. Well, 1.2 is a very good score. So at that point in time, back in 2017, believe it or not, BHP's financials had actually improved dramatically. It was back on track, right? So straight away, as a retiree investor, I'm starting to see some strength returning back into those cash flows. In addition, what we're also looking for at that stage is we're looking for stocks that are going to give us some dividends, right? Didn't seem all that great at that time, 1.57, right? So it didn't seem all that great, but hang on. Franking credits, both interim and final franking credits paid are fully franked. So we are going to get some dividends, we're going to get some franking credits, and we're also looking to get some capital growth. Now, as it turned out, the dividend yield added up over the year, and I'll get into that shortly. Right, so notice over here, the two dividend payout periods for 2017. Right, so the grossed up amount there effectively was just over $1.53. Right, so if you go back and look at the company records, the grossed up amount for 2017 was $1.53 odd. Right, the dividends were just over $1.07. Plus, then you got the franking credits thrown in there too at about 46 and a bit, and just under 46.5 cents for the year of 2017. It was broken out between these two periods here. I'm talking about the sum total. Right, so now the share price. Share price, and if I go back here to show you the share price as of 3 January 2017, the start of January 2017 was $25.46. We started to see this over the year. We started to see those earnings really powering up, which gave us a good sign about what was likely to take place on the share price. But going back to the dividends, the dividend payout for 2017, as we noted, was $1.53 fully grossed up, right? And that on the $25.46 purchase price, let's assume that as of the start of January 2017, we bought 500 BHP shares. So just over $12,700 we purchased in BHP as one of our many holdings in blue chip stocks. So just the dividend and the franking credits alone, right, on the $25.46 at the start of the year, as it turned out, the fully grossed up dividend for the year was just over $1.53 odd cents. So just the franking credits and the dividends alone ended up equating to, if you take the $1.53 and you divide it by the $25.46, I get just around 6%. All right, so let's just assume we make around about that 6%. Then this is where it starts to get interesting. So we've got our dividends, we've got our franking credits. Now, for those of you that want to earn a bit more, let's assume at the start of the year you owned the 500 BHP, right? So 12,730 all up. That's how much it would have cost you at the start of the year to buy the 500 shares. Now you could have gone out on the 27th of January. I've just picked this arbitrarily. It doesn't matter which date you pick. It's going to depend on what's available. But on the 27th of January, we could have gone out to the market and done 5 contracts, that being for a covered call. We could have done the covered call strategy. Now, just to cut to the chase, and I won't get into too much of the detail here, each contract would have given you $87. Right, so you would have got 5 lots of contracts at $87 a pop. You would have picked in $435. So you would have created a covered call, set up a covered call. What you could have done on the 27th of Jan is you could have gone to the market and said, look, share price is currently at $27.52. you can have my shares if they go to $29. Now, why would I have done that? Because you might be saying, oh, hang on, I don't want to give away my shares. You know, I've got no intention of selling them, but hang on, look what was starting to happen here. Now, if you do the more detailed course, we're going to show you exactly why we knew it was about to pull back. So we could have gone to the market and said, okay, you can have it at 29, knowing full well there was a very slim chance that it would go to $29. Someone pays you the rights for that for $435. That's yours forever. You keep that. As it turned out, the share price didn't go anywhere near 29 after 3 months out. You keep the $435. Even if it went to $29, you're still not upset. Why? Because if you acquired them at around about $27.52, let's say, for example, here, or at the start of the year, you acquired them around about the 25 and had gone all the way to 29, well, you would have made the difference between 29 and the acquisition price, plus you would have got to keep another $435. So the covered calls can be a real win-win situation on many occasions. All right, but I won't drill too much more into it. But just to give you an example here, 27 Jan, you could have picked up some covered call premiums there, options premium of $435. What about on the 30th of June, for example? Let's say, so tax time is over now. Here we are on 30 June. We could have picked up another $165. So the price here was at 23, 28. We would have said to someone, you can have our shares if they go to 29. That's about a 24% price increase. And you're going to give the person about 2 or 3 months for that contract. And after that, that's it. There's no more obligation. Guess what? You get to keep the 165. You got to ask yourself this question. Do you think BHP was going to rise 24% in 2 months, 2 or 3 months? Good chance it wasn't, right? So therefore, that 165 is a pretty smart play. And we'll teach you how you can set these up. If doing covered calls is not your cup of tea, no problem, because of course we'll specialize primarily on dividends and franking credits as well as capital growth. But this is just a little bit of extra for those of you that are looking to earn a little bit of extra. All right, so if I look at it this way, you know, if we just found stocks that didn't pay a dividend and you didn't sell covered calls, right, in this example, so we picked up the BHP stock there around about the $25 mark. We picked up $500 or 500 shares worth at the start of January 2017. If we just simply held that stock until the end of the year, we would have made $2,055 in capital appreciation. So we would have picked it up at $25.46, and then at the end of the year it was at $29.57. Right, so the difference $4.11 multiplied by 500 shares gives you the $2,055. Right, of course, there's franking credits and dividends in the mix, of course, but I'm just saying for argument's sake, let's just pretend there was no franking credits and dividends. A lot of investors and retiree investors often overlook the franking credits and the dividends. They're chasing after capital growth, but there's so much more that can be got by going into the dividends and franking credits. Right, so here we go. As it turned out, we were smart investors. We also bought a stock that was paying a dividend in this particular case. It's a capital appreciation of 2055. In addition, on the 500 shares that we owned, we would have got dividends of 537. So as it turned out, BHP paid just over $1.07 for the dividend component for the year. Then, in addition, all right, we would also picked up some franking credits. So here we are, some franking credits. And as it turned out, the franking credits were fully franked, and you picked up, what was it, just over, I think it was 46 odd cents times the 500 shares, and that would have given you the franking credits in there of 232. All right, so we picked up 537 in dividends, a further 232 in franking credits. It was just over 46 cents on the 500 shares. Plus, if we chose, we could have done some covered calls. And as we saw, the two examples there, it added up to $600. We just simply did it twice. A lot of retiree investors might do 4 or 5 covered calls on a given stock during a year. Now, you might notice over here, the capital appreciation, you might say, well, hang on, I thought it was just over $2,000. How come it's now dropped down to 1770? The reason why it's dropped down to 1770 is because of what we're doing on the covered call side of things. It drops the capital appreciation ever so slightly, but it's more than offset on the covered call, right? In the more advanced course, we'll go into that in a lot more detail. All right, so what would you rather have? The 2055 on a stock that went up and made you some good capital appreciation? Or would you rather have a 3139 where you get capital appreciation, dividends, franking credits, and you get the covered call premiums coming in? Of course, we'd rather go for this one here. But I know there's a few of you might be saying, well, hang on, I don't want to do the option side of things. I don't want to do, covered calls. Well, that's okay. If you did capital appreciation, franking credits and dividends, all right, you could do something like this. Or if you chose, you could do effectively all of these: capital appreciation, dividends, franking credits, and covered calls. This example here, I capped it at 1770 because I'm assuming at some point you might want to come in and do the covered calls. All right, so what we're offering here at VectorVest is we're offering you the ultimate retirement solution, right? So you can take this now in a lot more detail, right? There are 4 modules followed by 5 live webcasts that will put you on the right track, right? So this is what we're offering at this course. We'll teach you how you can manage 3 main retirement portfolios you need to get a retirement that gives you peace of mind. So, I'll get to the agenda shortly. We've put a lot of time into building 3 retirement portfolios, right? And those retirement portfolios will go through in a lot of detail. We're going to show you the type of stocks they pick up. We're going to show you the franking credits and the dividends. And then in additional webcasts, we'll have a bonus 5th webcast. We're going to teach you exactly how to do covered calls, right? So you'll have the exact tools knowing how to do them. Right, so we're going to teach you how to manage these portfolios, show you how to set them up, take away the emotion, right? Show you safe stocks that we focus on, plus capital appreciation. We'll show you growth and income portfolios. We'll show you a blue chip dividend growth stock portfolio that will focus on income, dividends, and franking credits, right? And we have several retirement portfolios that we'll show you as well. Our retirement growth portfolio has over 70% winning trades over the last 5 years, annualizing just over 20% returns a year. So we're going to teach you all these in the more advanced course. So, the agenda looks something along these lines here. We're going to show you how you can achieve capital appreciation, dividend income, franking credit income, covered calls as the additional bonus, show you how to build those retirement portfolios so you can walk away knowing exactly what to do. So you've got the power to do it yourself, right? So the outcome is to give you a clear investing strategy from a company that has been doing it for over 30 years, right? So 30 years VectorVest has been in business for, in Australia, over 11 years we've been here. All right, so here's the pricing. The regular price, now this is in US dollars, right? So be aware this is in US dollars. The reason why we do it, we're a global company, right? So we have standardized pricing now around the world. Regular price $495 USD. What I'm offering today, for those that are interested in taking this into a lot more depth, and that is we'll offer the special price of $395. Right, we're going to keep this open until Monday, right? As of after Monday, the price will then go back up to $495 USD. Now, I know in attendance, there's a lot of elite members here today. So what I mean by that is it's somebody that has been with VectorVest for 5 years or more, or has spent $5,000 or more with VectorVest over the years, right? You will fall under the elite members pricing, right? And for yourself, if that's you, the best way to book your place in is to call our toll-free number, and I'll bring that up shortly. You can secure your spot for $247.50. For those of you that are new to VectorVest or newish to VectorVest, or have only been a subscriber for a year or 2 or 3, all right, we're giving you the special price of $395. Here's another one of the retirement portfolios. Not bad, right? This one took a lot of hours to perfect, and we're watching this. We've actually been watching this one for about 4 or 5 months, all right? And it's still on track. The fully franked dividend pays, look at that, up 242%, 44% annualized. I'd be happy with a third of that, all right? And that does not include the franking credits or the dividend income, and we didn't do any covered calls on that one, which would have turbocharged it further. All right, so if you order before the end of the webinar today, or if you order by no later than Monday, right? So after the weekend, It's basically, we'll close it out on Monday. No later than Monday, we're going to give you some bonuses. All right, so we're going to provide 4 bonus implementation webinars, plus an additional bonus webinar where we're going to teach you exactly how to do those covered calls. Right, these webinars are there to help you overcome any difficulties you may be experiencing, because a lot of the times you'll leave a webinar all excited. Yep, no, I'm excited, and I'm looking forward to franking credits and dividends and doing some covered calls and building these safe blue chip type portfolios. But along the way, you might forget something, or it becomes confusing, or you don't know where to begin. That's why these webinars become absolutely instrumental. Right, these webinars will go through the training that we put together. Right, so how we're going to do it is we're going to release 4 modules, 4 pre-recorded modules that I've done. Right, so there's a lot of information in those modules, and we stagger them out, and I'll show you the release dates. And then once we've released it that weekend on the Saturday, we have a webinar to go over everything to do with that module. Right, and you can bring every possible question you want. I always answer every question put to me. Right, so at those webinars, we'll go through the module training. All right, so there's link www.vectorvest.com.au/URS. I'll just put that into the chat box there. So I've sent that link there to everybody here. And what I'm going to do here is I'm going to show you what the dates are for releasing those modules. Right, so this is what we've done. We have 4 mastery modules. If I concentrate on the bottom one here first, 4 mastery modules. So I'm going to release them as follows: Tuesday, 26 June, then Tuesday, 3 July, then Tuesday, 10 July, and then Tuesday, 17 July. You've got until that Saturday to go through it. And then on the Saturday, we do a live Q&A where you can get all your questions answered. Now, here's the thing. If you can't make that session, don't worry, it is recorded, right? So the mastery sessions here that go over the module. So the 26th of June, we release the first one. Then we have the mastery session going over the first module, right? So there it is, okay? If you can't make it, don't worry, the recording is sent to you, right? Then we release the second one. We release it in a program called Digital Chalk. Don't worry, all the instructions will be sent to you. It's pretty easy to use. It'll be released to you. You can watch it as many times as you want for the next 12 months. Right, so there is the second one, and then we'll have the mastery session. Those are recorded and they are sent to you if you can't make the recording for whatever reason. Now, in addition, and I haven't put this one in here, we're going to have an additional Q&A session, and that Q&A session is going to be purely for the covered calls. Right, at this stage here, and I'm just working on resources at this stage, but it'll also be subject to the majority ruling per the Q&A session number 1. I'll ask just to confirm the exact date, but at this stage, I'm looking effectively to do it on the 25th of July, that being a Wednesday evening, or otherwise we could potentially do it. We could potentially do it on the 28th of July to do the covered call strategy. When I put this course together, and if you look at pricing around the world for this type of knowledge, just the covered call stuff alone is probably what a lot of people charge. In fact, I've seen some covered call courses that charge about 3 times the price to what this total course is charging. All right, so I can assure you, you're going to get a lot of value. The other thing I wanted to show you here is there's a money back guarantee. All right, but there's a catch. Here's the catch, and this is what I ask. I want you to come along to every one of the mastery sessions, all right, and I want you to watch or at least be there at every one of the when I say mastery sessions, that's Q&As, but I want you to watch every one of the modules and be at every one of the mastery sessions, or at least have watched those webinars. Because believe you me, if you come along to every one of those mastery sessions and watch every one of the modules that we teach, I can guarantee you that I'll be very surprised if there's anybody that's asking for their money back. All right, so a lot of work, a lot of time's gone for this. We were asked over the last year or two for this course, so this is why we brought it out, and I know you're going to get a lot out of it. All right, so here we are. For those of you that are the elite subscribers, right, so you get the $247.50 pricing, right, so you've been with VectorVest for 5+ years, or you spent over $5,000 over the years at VectorVest. This is a number you want to give a bell to. All right, we are open in the next hour and a bit. At 9 o'clock, the office opens up again. All right, so you'll have to wait till 9 o'clock Sydney time, just over an hour. You can give that number a call. They'll double check. Yep, you're an elite subscriber. You want to come along to the Ultimate Retirement course provided by VectorVest Australia, and we'll get you onto that course at the special pricing. For those of you that are newish or new to VectorVest, of course, you get the special pricing as well. You're going to get a $395 USD. It comes with a money back guarantee, provided you come along to all the course work there. After Monday, it then reverts to $495. Okay, so what I'm going to do here, because I'm sure there's plenty of questions, I'm going to open it up now to Q&A, and I'll do my very best to get through all of the questions put to me. Right, so I'll just have to see where we are in terms of the Q&A field here, and let's get into it. Okay, so I see a lot of the Q&A coming in here was in regards to the questions I've been asking, but fire away in terms of the course. All right, here we are. Roland asks, will there be a recording of this webinar? Yes, Roland. So I'm pleased to say this is being recorded, and you'll be sent the recording shortly. Let's see, David asks, I've not considered advanced courses as they seem to be USA based as per your example. David, this will be for Australia, right? Using Australia data. Okay. When it comes to doing covered calls, I'll show you the Australian examples of covered calls, but I'm also going to show you what it's like in the US as well to do covered calls, because as you'll see, the premiums are infinitely better than what you can get in Australia, right? But I'm going to show both. This is 100% Australia based, right? So everything that we teach will be on Australia stocks. If there's enough demand, I'm happy to open it up to look at other countries' data using the exact same principles. But 100% of the time, unless asked otherwise, I'll stick to Australia data. All right. Wee Chen asks, how do we sell options? When you come along to the course, we'll get a lot into that. All right. So I'm not able to do it sort of on the spot here, but there's a lot to it. All right. But the idea being that for the retirement course, we want to keep it simple. Right. I want to keep it simple. You know, sometimes some of the most powerful strategies are the simple strategies. We're not going to get into multi-legged, you know, directional option type trades. We're going to keep it simple. Covered calls, naked puts, maybe a straddle. That's about it, because that's all you need as a retiree. Let's see. Lee asks, can you see the option prices in VectorVest? Yes, Lee, you can, and we will cover that in the course. That's where our option analyzer comes into play. Let's see, Lee asks, are you selling monthly, i.e. following monthly contracts? Lee, at this stage, we won't be looking at monthly options. We certainly provide those on the US training. So if you're after a monthly option contracts, certainly, but for the Australia one, we're going to keep it a bit more conservative. We're going to look to be doing one every 2 to 3 months max, because I think it's fair to say that most retirees wouldn't want to do more than, say, 2 or 3 option trades a year on a given stock. All right, so the idea being we want to keep it simple, keep it nice and simple and powerful. I mean, you look at that example on BHP, we just did 2 covered calls. We picked up an extra $600 on the $12,700 odd dollars that we invested. That's not bad. That's not bad yield, right? Now, if we had invested, you know, 10 times that, then of course we would have picked up 10 times as much yield. Or returns. The yield would have been the same, but 10 times more on the return. Let's see, Ray asks, is this only for Australian VectorVest clients? No, Ray, but I don't mind where you're located, but we will be demonstrating, of course, using Australia data. All right, so I know we've got quite a few investors from around the world that do invest into Australia. Great. If you like investing into the Australian market, then this is using Aussie data. Great, all the more power to you. Let's see, next one coming in here. I'll be away between the 22nd and 29th of July. So if it's possible, the later Q&A session would be preferable. All right, well, thanks for letting me know there. Certainly, I'll put a vote to the people as well on the first Q&A session. But look, we'll do our best to accommodate the majority. Worst case scenario, if you can't make it, you'll be sent the recording, of course. And the recording goes into Digital Chalk. And within Digital Chalk, you can watch that for 12 months, right? As many times as you want. Let's see. Brett asks, can you put covered calls on all stocks? And the answer to that, Brett, is sadly no. So that's where we come in, because we're going to speed things up for you. We're going to show you the list of stocks that can do covered calls. All right, and often it is the big blue chips. So absolutely perfect for retirees, and hence a lot of retirees make use of covered calls. I've come across a lot of retirees over the years who hold large amounts of certain stocks like BHP and Rio and CBA, for example. Those are prime candidates for covered calls. Why not get paid extra money for holding on to those stocks, because you have no intention of selling them, right? So you're picking up your dividends and your franking credits. Why not also pick up some covered call premium? All right, so we certainly will show you that. Let's see, San asks here, do you get access to VectorVest during the course? Absolutely. So if you are signing up, so here we go, I'll jump over to the link. So that link there was per the one that I've just put into the chat box. All right, so I'll just bring it across here, this link here. Let's bring it over so you can see it. All right, so it was this link, www.vectorvest.com.au/URS. All right, once you go to that link, this is the website that you'll be greeted with. All right, and in here you'll see the ultimate retirement solution. Keep making money while you enjoy life. All right, in this course you'll learn how to pick the best stocks, low risk stocks, steadily grow your portfolio, include our 6-part stock safety checklist. So we're going to take that checklist in a whole lot more detail. I just gave you the high level. 3 income generating strategies you need to be using. If truth be told, we're actually going to show you a 4th. How to protect your stocks and your entire account from big losses. So that's where some of the hedging stuff comes in that we'll teach you. The full Ultimate Retirement Workshop, all 4 pre-recorded modules. So you get the 4 recorded modules, plus you get 4 live mastery support sessions. And this is where we will take the theory and then make it applicable. Right, it's no point just having theory for the sake of it. It's got to be 100% practical and applicable, and that's where we'll show you. And then in addition, you'll get access to that for a year. So you can watch them as many times as you want. And of course, there's a bonus mastery session where we're going to be throwing in the covered calls. Right. So in addition to those 4 live mastery sessions, you're going to get the bonus covered call one that's going to be done. And I reckon that on its own, because I've been to, some workshops where they teach covered calls, and believe you me, that number's small in comparison to what some people want to charge for covered calls. We're not doing this, to try and make obscene sums of money. That's not what we're about here at VectorVest. We want to give you the power. This ultimately reflects the huge amount of work that's gone into it. All right, and for those that are loyal, long-term subscribers, I think that's a really good price that we're offering it at. Okay, so here it all is. All right, and then you then fill it out, and then you get signed up. Now remember, there is the money-back guarantee. So if you come along to all of those mastery sessions and you come along to the watch all the module recordings and you're still unhappy, we'll give you back your money. All right, let's see. Next one here, Ian asks, is it necessary to have Portfolio Genius to do this course, or is the basic VectorVest program sufficient? Ian, a lot of it won't need Genius, but if you do want to end up following some of the portfolios and modifying them, all right, and building a different variation of what we're going to teach you, then Genius becomes important. But if you're just going to follow what we've got, then there's no need for Genius. Let's see, Brett asks, how do you place a covered call with a broker from Saxa, for example? Yeah, and Brett, if you come along to the course, when I run the bonus training session, I'll show you exactly how you do it. All right, so just for time permitting here, I'd love to be able to drill into the system right now and show you, but at that webcast, I'll do it in a lot of detail. Peter Canning asks, do you need Options Pro? And I note, no need for Options Pro. We're not going to be getting into any Options Pro. It's going to be purely looking at Options Analyzer. Let's see. Next question there. How do you pay for the Options Analyzer software, or how much do you have to pay for the Options Analyzer software? Look, for the course, when we get on to doing covered calls, if you want the Options Analyzer, you can take it a 2-week trial. I think it's $10 or no dollars. All right. So, for those of you that come along to the course, when we get onto the options section, I'll make sure that you get access to the Options Analyzer. right, at literally no cost. It might be $10 or $0, but you'll get access to it. In fact, I think we'll just give it to you as part of the course when we teach you the options section. All right, so don't worry, there's no additional cost. In the worst case, I think it'll be $10. All right, but I'll speak to the team, and we'll turn it on for your two weeks there when we're teaching it. Fred asks, covered calls only apply to rising stocks. And that's the beauty of a covered call strategy there. Covered call strategy can work well in a rising market. That's ideal. You want to get called away. You want to get your stocks called away to lock in that juicy options premium and go out and repeat the process. But it also works in a falling market because you get the options premium that comes in that provides a cushion. So if the market does fall, you don't fall nearly as badly as what you may have. Now, within reason, if your options premium is only 3 or 4%, that means the market can fall 3 or 4% before you start experiencing a loss. But the covered call can work nicely both in an up and a down market. All right, Peter asks, from my experience, options brokerage is too expensive here in Australia. Is there a better broker? And Peter, I'll talk about option costs at the special bonus session. There are 1 or 2 brokers that do very competitive costs, very, very competitive costs. Option brokerage has come a long way in the last 5 or 6 years in Australia. But you're right, 5 or 6 years ago, placing an option could be quite expensive for some brokers. I'm pleased to say now that we'll show you 1 or 2 brokers where it's very competitive. Okay, Dave asks, can you collect franking credits if investing from outside of Australia? That's a very interesting question there, Dave. I've got to be honest, I'm not entirely sure on that one. It comes down to tax code and compliance. Perhaps someone there knows the tax code better than I, but that might be a question that you give our team on the toll-free number, 1-800-303-782. Give them a bell because we can certainly research into it. What I'll do too on here, for those of you that want to put a question to me, Dave, because you could put that question to me on an email too, and I could certainly research it for you. Let's just put my email address in here. So here I am, Russell Markham I'll just have to make that a little bit smaller, VectorVest.com. So here we go. I'll make this a little bit smaller. Flick your questions here to me if there's anything that you don't want to ask live on the session here, but there's my email address. So russellmarkham@VectorVest.com. So yeah, Dave, do us a favor, just flick that email to us. So I've got your email address and I can have a look into it. Let's see, Calvin asks here, what sort of capital base would be appropriate for the course to attain best value? That's a very interesting question because it just comes down to what type of portfolio you're looking to build. When I was putting the course together, I saw some very good results on $50,000 portfolios right up to $500,000 portfolios. All right, so we're going to show you the portfolios that we put together. The one I showed you earlier in the course today, there was one there that was $250,000. So if I jump out of here, let me just see if I can find that slide again. There we are. All right, so this one in fact, actually this one here, this was at 50,000. Look at that, grew to 160, and then there was another one that we had that did 250. Here we go. Here's this one here. Here's that portfolio again, but this time it's using 250. All right, so a lot of those portfolios are scalable. Around about the $500,000 to $600,000 mark, I find that diminishing returns often kicks in. All right, so we typically don't like to see the portfolios get much more than about 600,000 or 700,000. Now you might be saying, well, I've got substantially more than that, but remember, we're going to show you several portfolios, so you have the option to diversify across 3 or 4 different portfolios, which can easily accommodate, well over $2 million. All right, so I'll jump out of here. I'll jump back to the slide. You guys asked me there for my email address again, so here it is. Okay, next question through here. All these trades you'll show in the webinar, can you trade with your new partner, Saxo Bank? Absolutely, Roland, whether it be Saxo Bank or Interactive Brokers, or whoever you choose to use, all of this is possible with a reputable broker. All right. Certainly from the share perspective, from the option perspective, you'd need to double check that your broker does your options, but most option brokers do options these days, do Australia options. Let's see, next question here. What time of the day will you be running these classes? Yeah, great question. All right, so the times that I'll be running the Q&A sessions, all right, will be Saturday mornings at 10 o'clock. All right, so if I jump back to the slide here, and I'll just bring it across here. Where was it here? I'll jump back. All right, so these are all the sessions here, the Q&A sessions at 10 o'clock on a Saturday. And the reason why I put them on a Saturday is because a few of you have noted to me, look, I've got commitments during the week, or some of you are working part-time or still doing a bit of work here and there, right? For a lot of us, Saturday is a day where we've got some time. So Saturday, 10 o'clock in the morning. If you can't make it, of course, you'll be sent the recordings, all right? But do try to come along, because it's nothing better than getting your questions answered live in session. If you can't make the session, you can always send me an email asking a question, and then I'll answer that question's put to me live in the webcast, of which you'll then get the recording. All right, so you'll at least get it answered live at the time, even though you might not be able to attend. Right, Mike asks next question here, does the subscription price include the cost of using different VV tools, example, options, trader? So Mike, the standard VectorVest package doesn't include the options analyzer. All right, so it doesn't include the options analyzer. And the reason why we do it is so we can keep the price of VectorVest as competitive as possible. For anyone that does then want to go on and do things like a covered call, then you will need the options analyzer tool. All right, but even if you don't want to do the franking credits, the course is going to be about 90% focused on dividends, capital growth, and franking credits. All right, and then building those big blue chip portfolios. The franking credits will just simply be, a cherry on the cake, so to speak. All right, a lot of people don't want to do the franking credits regardless, right? Which is okay. But we want to empower you, so at least you are aware of it, because what we found over the years is that many of our subscribers, once they started looking at franking credits, should I say, bigger one, covered calls, should I say, the options premiums. Once they started doing covered calls, they never looked back. And I've had a few people call me over the years to say, why wasn't I taught this earlier in my life? If only I'd known. I would have done this years ago. All right, let's see. Next one here, San asks, do you issue tax invoice for the course if someone is trading for an SMSF? Absolutely, no problem there. So what you can do there, San, is you can call our team on the 1-800-303-782 number. I'll just bring that up here on the resources here. So there it is, 1-800-303-782. And you can then get them to issue an invoice in the name of your self-managed super fund. We get that all the time, right? Because of course it's tax deductible. Yeah, this is education related for your self-managed super fund. But just be doubly sure to check with your accountant. Let's see, Calvin asks here, how much is the basic VectorVest access per annum? All right, so the standard charge is $645 US a year. All right, and that gives you access to 2 countries. So by default, we give you Australia and the United States. Right, if you come along to this course, right, so if you sign up to this course, drop me an email. Just drop me an email here. Okay, so if I go back, where did I put my email address? There it is, right? Drop me an email there and I'll look to get you the discounted price at $595 USD. So we'll knock $50 off the subscription price. Let's see, David asks here, how much is the ongoing cost of the option analyzer once the course is concluded? David, it's a one-time charge. It's a one-time charge. The standard cost is $495 USD. For those of you that come along to the course, I'll look to get it for anybody that wants the options analyzer for $395 USD one-time charge. No more costs thereafter. So what's 395 divided by 0.75 is exchange rate around about there. It's about $530 odd one-time charge. Let's see. Next question here, for this course, is it mainly targeted on the Australia market? Yes, but if there's enough demand where you want to see the example done, let's say the US market, then I'm really happy to go and demonstrate the exact same principles. It's the principles that I'm teaching, all right? The principles that we teach. What's good about this course is we then take the Australia data and we show you exactly doing it with the Australia data, creating our portfolios, stress testing them with these type of stocks that you really would have bought in real life, Are these the type of dividends you're after? Are these the type of franking credits that you're after? If you were to do, covered calls, would these be the option premiums you'd be after? We do all that, but if for whatever reason, if there's enough demand, I can certainly demonstrate one or two other examples on, say, US data. But I want to keep this specifically and primarily 99% of it. I do want to stick within the Australia market because this is an Australian training course. Okay, but in Q&A sessions at the mastery sessions, so in those mastery sessions that we have, I'm flexible in those mastery sessions to demonstrate, for 5 minutes in another market if required. Let's see, Steve asks, do you just give info on how to find stocks, or do you give actual stocks as a portfolio? I will show you blow by blow exactly what was done. This is the day you put the $250,000 in. On that date, you bought, 600 CBA shares and 1,200 BHP shares and 350 Woolworths shares, whatever it might be. And on this date, I sold X number of BHP and replaced it with this many, Telstra, dare I say it, shares, etc., right? We show you exactly how it's done. It's one thing I respect about VectorVest. Everything that we teach, we show you exactly how it's done. All right? It's mathematics at its finest. We're showing you exactly how it's done. And as our founder, Dr. DeLito, notes, when you want the truth, you go to the numbers never lie. Right? So that's ultimately what we're after. Let's see, Mike asks, is this session recorded? And the answer to that is absolutely. This session has been recorded. The mastery sessions will be recorded, including the bonus. And the mastery modules, those are all pre-recorded. All right, and you can watch them as many times as you want. I've just finished Mastery Module number 1, which will be launched on the 26th of June. Now, that's a Tuesday. So every Tuesday it gets released. If you're prepared to stay up to the wee hours of Tuesday morning, it'll be there first thing in Tuesday morning. So if you get up at like 1 o'clock in the morning on Tuesday, it'll be there. So we basically release it in the early hours. So it gives you all of Tuesday, all of Wednesday, all of Thursday, all of Friday, and it gives you a good chunk of the Friday morning to watch the module, so you can then come along and take out the Q&A session, live. So you're watching it and doing it live. In the mastery modules too, the other thing I've done to assist, and you don't have to do it, but I'd strongly recommend you do it. I've set little homework tasks. Don't worry, not more than 5 or 10 minutes. But the reason why I've done that is because I'm trying to get you to apply practical principles. Principles that I've had retirees say to me over the last 8 years. Russell, if only someone had shown me how to do this years ago, I wouldn't be in this mess that I'm in now. Or if I'd only seen this years ago, this would have saved me a lot of stress, right? So I'm trying to teach you everything that I've seen over the last 8 years. And just so you know my background, I worked as a financial analyst in oil and gas for 5 years, right? So, I'm a numbers guy. I did a lot of number crunching for 5 years at a big oil and gas companies. Did M&A, merger and acquisition work, cash flow analysis, pulled balance sheets to pieces, forecasted out cash flows, you name it. So I've been there, I've done the nuts and bolts, right? But at the end of the day, it's about giving back as well. I've got that knowledge. I was lucky enough to had that opportunity in life. And I found that knowledge that I acquired in my early years of my life really helped me when I came to investing, because all of a sudden I started to understand exactly what drives a company, and ultimately what are the things we're looking for in a company. So it's no surprises. Anything you take away from today, and please don't see this as financial advice. Speak to your financial professional. I'm no longer licensed to give financial advice, but one thing I could show you, for example, here is if we went back to where was it, on the slides here when I showed you, the good and the bad shares, Cochlear, look at those earnings, all right? If you're picking on companies that are growing their earnings, there's a good chance that they're going to meet or exceed those dividends and the franking credits, all right? And if you then go on to do covered calls on a company like this, covered calls work best when a company is continuing to rise, because you get to lock in big capital upside and you get to lock in the options premium. It's a win-win. So it all stems around getting those nuts and bolts bolted down first. Find those high RS stocks with the powerful fundamentals behind them. All right, so I'll just jump back onto the end slide there where it's got got all the details there, and my email address. I think you want it as well, so I'll leave that there. There we are. So there's my email address. I think what I'll do is, do you want me to copy and paste that? I can copy and paste that into the program. So bear with me, give me a sec here. I'll copy and paste that into the program. In fact, I'll put it into the chat box. So I'll put that there into the chat box, so you've got that. And then I'll bring up the other slide. In fact, I've already put that through. Okay, good. There we are. So you've got the link. And any other questions, put them through to me, russellmarkham@vectorvest.com. There we are. I've just sent that off. There's my email address. And yep, a few of you asking for the link again. So here is a link. All right, and let's see, another question just come through. Do I need to be a VectorVest subscriber to join the course? And Kelvin, look, what I would suggest you do, and for anyone that's new, right, take out a 30-day trial. All right, so you drop me an email, we'll set you up on a 30-day trial. All right, so we can set you up on a 30-day trial, and you can then get access to the course, so you can test everything out while watching the course. Right, so what I mean is that you can have all the tools, and you're going to have 30 days. Right, so we can get you 30 days, and then after that, if you still need more time, which I'm sure you will, right, because you'll want to use the system more, then after that, to begin with, you can go on a monthly plan if you want. So it's $59 a month. So you can just go month to month. And then if you then feel, hey, this is something I really want, you can then revert to the $595. We'll give it to you at $595 USD for an annual subscription. If you go into an annual subscription, there's no lock-in contract. So if you decide to cancel for whatever reason, we'll pro-rata refund back what you haven't used. So there's no lock-in contract. Right, money back guarantee in the course, provided that you do all the coursework. I'd be very surprised if anybody does request their money back. All right, so I'm really looking forward to it. I'm not going to spoil the surprises in VectorVest, because I know a few of you ask me saying, look, can you go in and show us the portfolios in VectorVest and show us how it all sort of works and whatever have you. I'll just do one little sneak peek here, and that is you won't have this in your system, because we'll turn these on for those out of 10. But if I come into here, here's the growth, for example. I'll just hide this for now. Here's the growth one that we're working on at the moment. I won't steal too much in terms of stealing the show, but how do you like the look of that? Pretty good, right? This is not exactly keeping you up at night, you know, type sort of strategy. It's pretty smooth. Here it's current holdings. Surprise, surprise, aristocrat. We saw that with the absolute knockout earnings. All right, surprise, surprise, is corporate travel. All right, so this is what it's all about. These returns here are not including franking credits, and they're not including dividend yield. All right, so there it is. How would you like something like this? You know, this was just done on $25,000. Now, if you scale this up and put in, say, $250,000 and roll it forward, you'll see pretty similar returns. So when we built these, we built them so they could be scaled up. All right, so I'll leave it there. I won't give away too much more. All right, so look forward to you coming along to the course. You've got until Monday. All right, you've got the money back guarantee, so why not secure your spot now? All right, look forward to seeing you there. Can't wait to deliver it. It's been many weeks in the making, and really looking forward to running those mastery sessions. Yeah, a few of you asked me to put the mastery sessions back on as well. So those will be the mastery sessions plus the bonus one on covered calls. All right, and these will be the dates that we release the training modules. All right, thanks again. If you've got any further questions, drop me an email. All right, so you've got my email as well. Okay, hopefully I'll see a lot of you at the course. All right, thanks again. Bye for now.